Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get started and we get into talking about the markets, it's really kind of been a wild ride on the cattle side of things. Let's start there and talk about what happened this week on the livestock market.
It's number one, it's a fun time to be a cattle producer this week, that's for sure, given some of the market moves we saw this week. On the fed cattle side, we were firmly $5 higher for the week. Feeder cattle were $3 to $13 higher, with a lot of demand strength towards the end of the week, as those higher fed cattle prices encouraged some demand for feeder cattle to go in feed yards. Feeder calves as well, 1 to 4 higher as well this week. So it's an amazing week to come after what we thought would be a pretty strong Memorial Day weekend, to see continued strength in cattle markets. On the beef side, choice beef cutout was down about 80 cents for the week. We did see rib prices that were almost $4 higher for the week. So still some strength in that upper end. And I think when you look at the choice select spread that we saw again this week, setting at or near record levels, it just reminds us that the demand for higher quality beef seems to be very strong right now. Even on the pork side, we saw strength this week, with cash hogs up about $1 for the week. We also saw the pork cutout value almost up $1 as well, led in large part by what we saw happening on the belly side. Futures markets as well were extremely warm on the cattle side in particular. We ended up about $8 higher for the week in terms of fed cattle prices, and nearly $15 when you look at feeder cattle prices on the futures side for the week. So what a way to start the first week of June.
And the unofficial really start of summer, as we kicked off with the Memorial Day weekend. As we look at those numbers, Scott, are we surprised coming off of a short trading week and to see such strength at the end of the week, especially on the cattle side of things?
Yeah, I think we are a little bit surprised. It just reminds me that demand seems to look fairly strong. So I remind us, if you look at where we're at in terms of that choice beef cutout value, we're setting about a little north of $2.40 when we got to the peak. It wasn't that long ago, when we were in 2014, where we would have talked about record fed cattle prices and record choice box beef values. And those records were $2.60. So it's amazing the kind of strength we've seen in terms of that choice beef cutout. It reminds me that packers probably are seeing some pretty good black ink right now. It means they can pay a lot more for cattle, and it just is another indication that demand is strong. But we certainly would have thought we might have taken a little breath this week, coming with what's a short week after Memorial Day weekend.
What about the pork side of things, to look at that as well? How does having that short week impact slaughter numbers, and is that having a role in what's going on with the markets?
Yeah, I think we've seen a little bit of a limited, with a little less interest in making a big run this week with the holiday at the beginning. But I'll say, I think on the pork side as well, we're seeing this idea that strength in those wholesale pork prices are coming as folks are beginning to make that switch of maybe featuring a little more pork than we would have in the month of May. So the demand side for me seems to be still the driver, and thank goodness. We're seeing that very strong demand when you think about the supply growth we have out there.
Scott, we're also going to talk a little bit, a couple of interesting numbers that came out today, this week, restaurant performance index. As we look at that, we talk about demand being key. How does that number relate to maybe what we're thinking about on the livestock side and what it means for our demand domestically?
Yeah, I think when you look at that restaurant performance index we got out on Wednesday, there's still a lot of good news in that report. So number one, when we think about the overall index for April, it was up 0.3%, which suggests still some growth out of that overall restaurant performance index. That comes after what was that phenomenal month of March, where we were up 1.8%. So the fact we could continue to tack on some growth in April ought to tell us that restaurant performance index overall is giving us some strength. Now, when you start to look at some of the individual components, that's where I think we can see some things that I won't say troubles me too much, but we want to be paying attention to. And that current situation index that we saw for April was actually coming in at 99.1, so down 0.9 relative to where we've been. That's one we're going to want to watch. When we look at that same store sales that makes up a portion of that current situation index, we have been down 6 of the last 7 months in terms of same store sales. So we don't want that to continue, I guess, forever as we look ahead. And again, March was the only exception where we saw same store sales actually up for the first time in a while. Yet, when you look at the expectations side of the picture, that's what's been driving the restaurant performance index and continues to do so. The April numbers gave us a 1.5% increase. So with the strength, I think, in the economy, there's a lot of still expectation as we look over the next few months that we're going to see some continued growth in that restaurant performance index.
Jobs report came out today, another record low, the lowest it's been in how many years?
I think you got to go back 16 years to find a lower unemployment rate than what we got this morning.
But as we take a look at that number, does it tell the full story? I mean, it's a great feel-good that our unemployment rate is so low, but does it tell the whole story?
Yeah, it probably doesn't tell the whole story, and I think sometimes people quickly get wrapped up in wanting to tell their version of the story through that unemployment rate. I will say, number one, we have a lot more jobs than we once had, right? As we come out of what was a very tough period of time, we have seen job creation. At the same time, we can't talk about just the job creation side of that picture. We've probably also had some folks that have given up and looking for work. And so that unemployment rate has both components in it. And I think when you look at the job creation we got out of this report, maybe not quite as high as we expected. So, you know, we will be happy with what's a unemployment rate we haven't seen in nearly 2 decades. Yet we want to remind ourselves that we still have some folks that have trouble finding employment in this new economy.
We're going to talk a little bit today about something we don't necessarily get into a lot. We'll talk a little bit about the poultry side of things. Let's start first. What are some things and notable takeaways from what's going on in the poultry market?
Yeah, I think first of all, we need to look at prices as we try to figure out what's keeping all this strength in beef and pork prices. I think turning to what's been happening in chicken prices could be instructive for us. When we look at chicken breast prices, we're at the highest level we've seen in 2 years for chicken breast prices. If we look at chicken wings, certainly the main course of any good Super Bowl party, at over $2 a pound is the highest we've really seen since 2015. So when we look at the chicken side, those prices are running very high relative to historical standards, regardless of the product that we're talking about. So they really don't weigh on beef and pork prices, I think, is what we're seeing. And at the same time, the production of chicken has also been slower than maybe many of us would have anticipated. Just as we've seen lower cattle weights, we've seen lower chicken weights as well, which I think has kept chicken production in better stead. We're almost current to this year showing no growth in overall chicken production. And we don't do that very often in the chicken industry. And the point I think is very important when you think about chicken being almost 40% of total red meat and poultry production. Chicken supplies matter a lot to the overall meat situation.
When we look at, when we compare production numbers, how is chicken stacking up to the other red meats?
Yeah, so number one, it's a very different situation than we traditionally think about. I used to joke all the time we knew 3 things with certainty: death, taxes, and a 2% increase in chicken production in this country. And I found out recently that we don't know all those 3 things with certainty any longer. But on the chicken side of things, the fact that we're only probably going to be up about a little more than 500 million pounds in chicken production in 2016 doesn't occur very often. If you kind of look ahead and I give you my own thoughts about the next couple of years, the 3-year increase in chicken production coming in at a little more than 2 billion pounds, it is much lower than we might have thought of a few years ago. Yet when you look at the beef side of the picture, All right, so this year we're going to be up over 1.5 billion pounds probably in beef production when it's all said and done. When you look 2018, we're probably, and over the 3-year period of 16 through 18, we're probably going to be up over 3 billion pounds. We're being led by beef for a change instead of chicken in terms of that growth. And even chicken production growth over 16 to 18 is going to be less than what we see happening on the pork side as well. So it's flip-flopped in terms of what we might think of as normal there.
There's still some pretty big numbers as we look at it. I would have to imagine that we talk so much on a regular basis about demand, both domestic and internationally, remaining strong. So those markets like Japan, Korea, and hopefully eventually China for U.S. beef specifically.
Yeah, so I think we have to be very happy with just how strong prices have been, and we really have to look at the demand side of the picture. I hope at times it reminds us when we look at the supply growth that we have occurring that there is, despite what are very strong prices today, downside risk in these markets. And maybe we won't see any hiccups on the demand side and it will continue to grow along. But if our economy were to slow down, or economies in those other key countries, and we can take Mexico, Japan, Korea, potentially China, all those things I think matter immensely to where we go in front of us. And this idea that is there more downside risk in these markets today than upside potential? I might bet that's the case right now, but that's certainly going against the odds that we've seen so far in 2017.
If that's the case, how do producers here in the U.S. keep themselves protected and prevent and maybe mitigate some of that risk to protect their profits and operations?
Yeah, I think there's a lot of things that need to be thought about. Number one, this idea of, should I expand my cow herd today? Should I expand my sow herd today? Don't make those decisions based on where we sit today. At least have some thought about where we might be, and in the case of beef, 2 or 3 years down the road, right? It takes a period of time before we actually see output from adding that additional cow to the herd. I do hope we plan, instead of looking at today's prices lasting forever, that we at least plan and go, how much of a price decline could I take yet still at least break even? And there, and when I say break even, what's my cost of production, right? So cost of production matters a lot in this situation, but I got to do that kind of planning for the long term if I'm going to make those kinds of expansion decisions. And of course, there's always things to do relative to futures markets. When you see the kind of runs that we got this week in cattle markets, it reminds me to help folks think through whether now's the time. Do I lock in fall calves that I might want to bring to market late this year right now, just to reduce some risk? And I never say lock in 100%, but the opportunity to lock in some decent prices, or at least prices that have moved up considerably, sits there today.
Anything else this week, Scott?
I think we've covered it, given, we've kind of had a little bit of shorter week with Memorial Day weekend, but it's nice to have another week of very positive news across the board.
Good to see you. We will see you next Friday.
Very good. We will see you next Friday.
Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click on the subscribe link. You can also ask questions and submit comments there as well. And for market updates twice daily, subscribe to our Market Minute with Brownfield commodity reporter John Perkins. Have a great weekend. I'm Megan Grebner on Brownfield.